If you're happy to be on the call, type Shaya. Today's call is going to be very interesting. We are going to learn something very, very interesting today. We are going to learn something very, very interesting today. So call your friends who are not on the call. Let them get onto the call. Let them get on the call. Tell them we are starting. Tell them we are starting. We are not going to spend much time. So if they come late, they won't come and meet us. Invite them, chat them to come for the training. We are starting. We are starting. We now have 15 people on the call. We have 15 people on the call. I don't know why we don't like coming to listen to what they want to teach us. And we don't even go to the YouTube channel to watch the videos. Okay? Because the same things we are teaching here, because you don't come for class or you don't go to the YouTube channel to watch the videos, you come back to the page and you ask the same questions there, which is very bad. You are making the work of the page leader very, very difficult, because the time he also used to monitor the trades, to give you instruction, he's using it to answer your questions. The CEO is answering your questions, but then we have answered all these questions on Zoom call, and the videos are on the YouTube channel. So I don't know why we come back to the page and then we ask the same questions. For instance, somebody will ask you, how do I deposit money on into my um Coin's account or into my binary account? Meanwhile, the video is on the YouTube channel there for everybody to watch, but we don't watch it. It's very bad, very, very bad. Please, we have to change our attitudes. We must learn. Okay, you have to learn. You have to read. You have to watch videos. In this business, without doing that, you will not reach the height you want to reach, honestly speaking, because you will always be matching time. Okay, you'll be marking time every day, every second, every minute, because you are not adding knowledge to the little that you have. There are vast amount of knowledge out there that you can add to the amount that you have and increase that amount of what of knowledge you have. But then if you just sit down and waiting that way, if you want, you just ask on the page. For me, unless I say that the question honestly is a new question, it doesn't have any video on the YouTube channel that you can come and watch and then to answer the question for. That is where me I answer, because I'll not stress myself whilst I know that the thing is there. You can just go to the YouTube page and watch, and then you are answered. But then you want somebody to talk again. It's bad. Okay. So I advise that we all put a stop to this attitude, so that we can all benefit from the business that we are into. Know that it's not a gamble, it's a business. So if you don't treat it as such, you always not see the result. Please, if you are with me, type Shaya in the chat box. If you are with me, type Shaya in the chat box. All right, all right, all right. Shaya. All right. Okay, so let's start today's lesson. Okay, once again, you are welcome to Boss FS University of Boss Traders GH. Today we are coming to look at a very interesting topic. We are coming to look at a very interesting topic for the day. And this topic is the right way to trade with a small account. The right way to trade with a small account. And the reason why I'm bringing this topic this evening, I'm coming to talk about this topic this evening, is every day you hear so many people crying on the page. Those of us with small accounts, blah blah blah. What about us? This is a business, okay? This is a business, and if you are having a small account, yeah, your account is small, but how best can you trade with this account and see results, just as other people with bigger accounts are seeing? Okay, So we will look at some few points and then we will explain them into detail. So the first point is you must reduce your financial stress. You must reduce your financial stress. Now, what do we mean by you should reduce your financial stress? Some of you the small account you have, you want to trade that small account, make profit, use that same profit to feed yourself, to buy your stuffs, to buy your credit, to buy your kebabs, your lunch and so on. But if you really want to increase or to move your small account to something incredible or something big in the future, then you must limit the stress you put on that particular account. Just assume that with that particular account, you are hot. That particular money you have deposited in that account for your trading is lost. Just put it that way. Just make up your mind that that money is lost when it comes to what expenses, financial expenses, financial burdens. You don't look at this particular capital you are using to start this business when your capital is small. So the first thing is you should trade with less stress. Okay, you should trade with what? Less stress. So you are trading and you are thinking, oh, I have to do auto ship. So instead of opening 0.01 lot size, because of that stress, you go and open what 0.2, like 0.2, 0.3, 0.05, things that are not the size of your account. Okay, lot sizes that are not your account's lot sizes are what you are using. And when you do that, you are stressing your account and you can never grow such account because you are beginning to gamble with it if you begin such life, which is very, 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 very bad for us. We must not in any way trade with stress. Another thing is you should increase your capital. When we say you should increase your capital, it means that, all right, every month, let's say you are able to make let's say 20% profit on your small account, let's say $100 account. So you were able to make about $20 as profit on it by the close of the month, which is not even up to your auto ship money. No problem. What you need to do is, as a business minded person, you shouldn't cry about your auto ship. What you rather have to do is you should be able to make up your mind that you are going to look for money, leave that capital, look for money, do your auto ship, and then you look for some capital and even top up what you already have in your trading account to increase it. So that is the second point. You have to increase. That is the second point under the first major point. You have to increase your finance, your trading account, so that you reduce your financial stress as well. This will help you to grow your small account very fast. Let's look at the next major point. The next major point is you should be realistic. Be realistic. It's very, very important. In this business, you must be realistic. If you should accept the fact that you are using a small account. Therefore, your account doesn't match somebody using $5,000 account, $50,000 account, $3,000 account, $2,000 account. Yours is a small account, $50, $200, $300. Accept that fact. That is what you have. It's different from somebody who have a bigger account. That is what the person have. At this moment, this is what you have. So you have to be realistic. Don't aim for the sky. Be realistic. Okay. Most likely your small trading account will be like a practice account. Okay. That's to help you acquire the necessary skills that you need. Please, are we following? If you are really following and enjoying the lesson, type 1 in the chat box. If you are really enjoying and following this lesson, type 1 in the chat box. Type 1 in the chat box. Thank you, Mami Trewa. Type 1 in the chat box. Augustina, Josh, Kobe, King. Yeah. It means you guys are following. So let's continue. Let's continue. All right. So as I was saying, you have to be very realistic when it comes to these things. You must accept the fact that you have a smaller account and you must trade by that fact. Don't be competing with somebody that has what, a bigger account. It's not done. It's not done. It's not right. So if, let's say, your channel leader is using $5,000 account and is using a lot size of 0.5, you two, you are using $100 and you want to go and open a lot size of 0.5, that is suicide. Your account will blow within a second. So you have to be really realistic. Another thing is you must be patient. Patience is crucial in this case. Patience is very, very crucial. If you don't have patience, you can't build a small account to a bigger account. And you always end up blowing your account, because you will still need a long time to grow that small account to a size that matters to you. So if you don't have patience, you will not be able to do that. Now, being realistic means recognizing a few truths about trading with a small account. Recognize that most of the time you will not be trading. That is a fact. It's not always that you trade with a small account. You see, there are some pairs that a small account you don't even need to enter. Pairs, those heavy pairs is not good for a small account. Pairs like GBB pairs, gold, silver, they are not good. They may bring those you may see signals on those pairs, but it doesn't necessarily means that by force you should enter those pairs. Even there are days that you must even take a break at all from the market. You must not even trade. With that, you relax yourself emotionally, so the emotional aspect will be out of the way. Okay, so it's very, very important that you consider these things as you trade. It helps a lot. It will help you in the long run. All right, so now let's look at another thing. Don't trade because the market is open and you want to make money. Trade because an opportunity that you are prepared to capitalize on has presented itself. Most of us just trade because signal comes or signal has come. Okay, that's our mindset. Oh, let me just go and make some profit for myself. Let me just go and make some money for myself. Let me make some cocoa money. Let me make some bread money for breakfast or lunch. You see, as soon as you begin to take this in that dimension, you realize that you not make any good living out of it. You always be trading so that the money will become from hand to mouth. Okay, which is wrong. You must be so realistic that you must take the whole thing like an opportunity that has been presented to you, and you need to capitalize on it and make a living out of it. I hope that is clear. So let's go to the next one. So the next point is trade conservatively. Trade conservatively. Trade conservatively. All right. Now, as a trader with a small account, you must be more cautious. Make sure that the risk to reward ratio and the win to loss ratio are being calculated and used correctly. Okay, so that's why always we give you the lot sizes that you use, and also the experts do what they calculate the interval, the amount they think, if even if your account size is small and you lose, it won't have that adverse effect on your account. That is what they give as what that is the amount of pips that they give as SL or TP. So they look at the risk to reward ratio and also the loss ratio, the win to loss ratio, and this is very, very important when you are trading with a smaller account. All right, the next thing is you must adhere to the 1% risk rule. You must adhere to the 1% risk rule, which most of us know very well that we always disobey. We sit in our small rooms and we disobey this particular rule. If you know you have been, you don't disobey this rule, type 1 in the chat box. If you know you always obey you adhere to the 1% risk rule, which is if it is 0.01, you use 0.01, please type 1 in the chat box. But if you know you don't obey it, don't type the 1. God is watching you. Don't lie. Somebody should type Shaya. Thank you. Thank you. Let's go on. We have 10 minutes more. We have 10 minutes more. Let's go on. So, as I was saying, always as a trader, you must be able to adhere to what the 1% risk rule. It's very, very, very important. Very, very important. Okay. Now, you see, trading in accordance with the 1% risk rule provides a small account with the same buffer that is against mistakes, unexpected losses, etc., as a large account. Many professional traders abide by the 1% risk rule regardless of the size of their trading accounts because it is a very effective risk management technique. You see, for instance, for instance, I'm a person that always like to adhere to this particular rule. I always calculate the 1% risk rule, like the 1% ratio of what of my trading account. I always try to find out the 1% that I can risk for my account and trade by that. I don't risk more than what I feel I can lose. I always risk what I feel I'm ready to lose in the market and make profit of the same what sort. All right. So there are people who don't consider this. So there are people even with their large account size, they obey this rule. And you can see previously when I was doing what when I was posting my results on the page, you realize that even with my large account size, sometimes I use smaller lot sizes for some kind of pairs. That is because I'm adhering to what this particular what 1% risk rule is very important. All right, let's look at the next thing. Trade, you should always trade using what leverage or leverage. That's why when you are creating your trading account, we always say choose the right leverage. Maybe 1:500, 1:200 as what as your leverage. All right. What does this do? What does this help us to what to do? Trading using leverage allows small account traders to trade markets that they cannot trade using cash. Leverage and margin requirements should be understood before trading. In this example, investors should not necessarily use leverage to increase the trade's size. That is your lot size. That is the number of shares or lot size, but rather only to reduce the trade's margin requirements. So you realize that when you are trading, the right margin and free margins. Okay. So what happens is if you are trading without leverage, it means the amount of money you have when it is finished, it is small. So without the leverage, it is already a small account size. So with some lot sizes that you use or number of shares that you use, you realize that you'll be out of the market quickly. But then the brokers, the leverage is like they are giving you some amount of money to trade with. Okay, just that you don't see it in cash, but then it's a kind of like an invisible cash that is being given to you to trade with. So what it does is it increases your margin, so it helps you to stay in the market for long. So even if your account size is small, so what happens is if you decide to increase your lot size because your leverage is very good, then you end up what losing your money quick, because it is the same way it will increase your profit, the same way it will increase your loss as well. So we must adhere to these points that I have mentioned above in order to be able to what, increase our small accounts. Please, I've come to the end of my presentation. If you have any question, kindly put it across and let me answer them. We have 5 minutes to go. If you have any question, please put it up so that you can unmute yourself and ask the question, or you can type it in the chat box and I'll answer you quickly. We have 5 minutes. All right, I think nobody have any question. Okay.
Dr. Boss.
All right.
Hello, Dr. Boss.
Yeah, I can hear you.
Can you hear me?
Yes, please.
This is like about the 1% rule. Assuming I have $100, so it means I should be willing to risk just $1, or I don't get it that much. I don't know if you can give a practical example with an account size for us to know how much we are really supposed to risk with the 1% rule.
Okay. All right. So with the 1% risk ratio, what we are trying to say is, yeah, you should risk just 1% of the amount total trading capital in your trading account. Are you okay?
Yeah, okay.
Yeah. But people, the thing is from 1% to 2%, but normally we just used to say 1% because it is the least, but then it's between 1 to 2%. So you can choose 1.5, you can choose 2% of your account. So let's say you can choose to lose just $2 of your $100. That's why most of the time people put their SL at 20 pips for $100, and that is $2. Okay, that is $2. Please, do you understand?
Okay.
Yeah.
Yeah, I'm clear.
All right.
All right.
Please, any other question? All right, somebody is asking which leverage is best for risking 1%. Please, as a beginner, no matter the leverage given to you by the broker, the best leverage for you to use is 1:500. If they don't have 1:500, then I'll advise you to use 1:200. Please wait, that the person should mute himself. Please kindly mute yourself. All right, I think I'll have to close in. Some people have decided. Yes, hello. Hello.
Hello, boss.
Yes.
Please, hello.
I can hear you. Please speak.
Please. I also wanted to know is the fact that okay, you said we should risk at least 1 to.
Hello. Hello. Please, the difference between 1:100 and 1:500 is just the how big the leverage is. Okay, 1:100 is a bit too low. Okay, it's too low for you, especially if your account size is small. All right, so I think that's why I said the best one to use is 1:200 or 1:500. Most often 1:500 as a beginner. But when you become a master of your own, you can use 1:1000 and so on. Even you can use 1:50. But for now, all I'm trying to tell you is that as beginners as you are, the best one for you to consider is 1:200 or 1:500. And I will say you should go by 1:500. We have less than a minute. So if you have any other question, when we meet next time, you can put it across. God be with you all. The video will be placed on the YouTube channel for you to watch at any time. Thank you and God bless you.